Okay, so yeah, here we go. So let me pull up some charts here. I'm gonna move on to USD Swiss franc. Let's start with the 15-minute charts here. We're gonna work on this one and we'll work our way up. If you guys have any requests for certain charts, we can look at that as well. But for now, here we go. All right, so now a couple things about support and resistance. Now, support and resistance basically in the market is an idea of, well, where will my markets react from, or where will the markets turn around from? So let me ask you this question, and I'm going to start drawing here. Okay, let me know when you guys can see the circle. Yeah, when you guys can see the circle, let's begin. Okay, good. So now when we see a support and resistance, let's say the markets are in a uptrend. The markets go up, they start hovering sideways, or they pull back and then they go further up. Hovering sideways, pull back, they go further up. So whenever we see something like this, we automatically assume that, okay, well, this used to be resistance and now it's support. This used to be resistance and now it's support. But now let me ask you this question. Okay? So just as a recap, resistance is above your current price. Okay? That one is called resistance. And just for the basic knowledge, support is what is below your current price. Okay? So right now, this is considered support, because if price is right here, that level below is support. If there's a level above you, that's considered resistance. So just basic knowledge there like that, right? Okay. Now with this support and resistance knowledge, there's one thing I want to share with you. In the market, there's actually two trains of thoughts with the market. One train of thought is, if the market bounces enough times from the resistance, that level is strong. The other train of thought is, if the market bounces from a level so many times, that level is weak. I want you to think about it for a moment. If you guys do know a little bit about support and resistance, and think, which one is correct? Which one is correct? Are you in the train of thought, the more times it hits us must be a very good level, or the more times it hits it, it starts to become a weak level? Okay? Now keep these things in mind, because I'm going to ask you this in the quiz as well. Okay? All right, so let's get rid of all of this stuff here. Okay. Now, okay, take a look at this. Now, I want you guys to start to read support and resistance in this way. I've used this in one of my events not too long ago, and also in some of my webinar with my students. I want you to focus on this very carefully. When a level goes up to a certain price, okay, let's say this price here is $10 and the price up here is $20. Okay, just take an example. $10 and $20. Okay, no need to overthink it in terms of currency. Just think as normal price. Now, price goes up to $20. From the $20 mark, it starts to pull back and starts to go down and down and down, reaches $18. And then from the $18, it further reacts and goes down to $15. Okay? After it reaches $15, it starts to slowly go back up to $20. Now, what I'm about to tell you guys now is to now think of support and resistance with this word. Support and resistance is nothing but memory. Okay? It's nothing but memory. Okay? Now, here's why. Here's why we say that. As a human being, when you think of this, when you think of prices, when you go out shopping, you might look at this area and say, oh my God, remember when price was at $20? Everything started coming down and down and down and down for the longest time, and it reached $15. So once price reaches back up at $20, people think, oh my God, it's probably going to go down again. It's probably going to go down again. Does that make sense? That's why we call this as resistance. It's because the memory gets activated. So far, so good? Everyone with me? Okay, so as the memory gets activated, they're like, oh yeah, it's going to get a discount again. Now focus very carefully what I'm about to say next, because that is going to answer your question about how do I know if a level is going to hold or not? Because the question in trading, the $1 million question in trading is, will this level hold or am I going to go through it? If you can answer that question, you make money. If you cannot answer that question, it is just a coin toss. Just like everything else in Forex becomes. If you do not have the right education, it becomes a coin toss. Let's get into it. This memory activates and people are like, oh, markets start to go down. And the person who says it's going to go down again says, I told you, look at that price as it goes down. He feels very happy about it and says, that's right. I feel good about myself, right? Now, here's the thing. As prices go back up again, okay, hits the memory, and you're thinking, is it going to work again? How it matters is not how it reached there, but what matters is last time when prices hit that memory, how far down did they come? That needs to be answered. That needs to be answered. So, as an example, let me show you another one. So, it's not how many times it touches it. No. It's not because it touched it so many times it's weak. No. It's not because it touched it so many times it's strong. Also, no. The answer is, once it touched it, what happened? What happened once it touched it? Keep that in mind. Keep that in mind. Okay, so let me show you again here. Let's say the market goes up, hits a resistance level, okay? Let's say it's a resistance level from the past. Memory of people activate. They're like, if it dropped from there last time, it's going to drop again. This is how the idea of double tops and triple tops, this is how that idea activates. Many of you guys probably heard of these terminologies in the technical market, right? It's like, oh, you got a double top, markets will go down. You got a triple top, market has to go down. Why does it have to go down? Or why will it not respect it? You need to know this why. So let's answer that why. If prices come back up, okay, let's say prices come back up to this area, okay, when you see that area and you're like, okay, what happened on the way down before? Prices drop. It was very powerful. It came all the way down, making this area correct. Which means our chances of using that as resistance become stronger. Now, after that, once it reacts to this area, and this time, if this is all it can do, when it reaches up to this area, now we can officially say it is becoming weak. Okay? So, again, as a small recap, is it how many times it touches it? Does it make it strong or weak? Does that matter? No. It's not how many times it touches it, but what happens once it touches it. Okay? How many of you guys had an aha moment right now? Basic stuff about support and resistance, but it's so uncommon in the world that the average person does not understand support and resistance. They treat it like a line that they must draw in the sky and the prices has to react. It doesn't have to. Okay? All right, good. Okay, can see there's a lot of you guys had an aha moment about this. All right, so now let's take this to the charts. And let's take a look at it on how it actually looks on the charts. I see some people saying, if I can please explain it again. Not to worry, I'm gonna explain it on the charts. You guys can watch it there. Okay, so let's turn on the screen sharing again. Now, if you take a look at this area here, I'm gonna draw a circle on there, okay? If you take a look at that area right there, and I say, look at that area, it is acting like prices reacted from here and they dropped. Okay, I'm gonna put my line further across. and they drop. Let me increase my screen size so it's visible to everybody. Okay, and I'll make my lines a little bit thicker and maybe a different color as well. Okay, yeah, here I'll just draw. Okay. Okay, can everyone see that line right there basically? If I was to just take that line all the way across. Okay. Now the question comes is, when it dropped from this area, all you want to do is keep this idea of, did it make a lower low? Okay, so previously this was its lowest point. Were we able to make a new low once it reacted from that area? If you can say yes, this level is now important. Okay, this level is now important. Now, take a look at this area. Would you say this is an important area that used to be support? Okay, let me do it again here. This area here that used to be support because it was holding the market from here, and then it broke through and now it's become resistance. So it's become a memory area, but once this memory area gets hit in the future, what does it do? What does it do? Can he make a lower low? Nope. Nope. How strong do you think this level is going to be going forward? Now I want you to answer this question for me. Does it matter how many times a line touches? Does it have anything to do with that? Okay? Okay, so for those of you who were telling me to repeat this, I hope it's starting to make a little bit more sense. It gets weaker, doesn't it? Yeah, very good, very good. I can see a lot of you guys are also answering and coming along. That's very, very good. Yeah. So keep these things in mind. You know, this is just basic support and resistance, but we need to be on top of this because this is the matter of a profit and a loss in your information. People, those of you who trade Fibonacci, this is vital. You cannot not know this information. It's extremely vital. Okay? It's not about a level that touches and we make $1 million. If it was so easy, everyone would make $1 million, right? Okay, so keep it simple, okay? But also know the knowledge behind it. So when we're thinking about knowledge, okay, so this area that reacted last time, when it goes down and we say prices went down a lot, so the second thing that makes a difference is not the way it touches, but what it does, okay? So how does it react? That's one. Okay, well, let's write this notes down. What happens? What happens when it touches? That's one. Okay, the next thing we want to keep track of, okay, number two is how long has it been? Okay, that's important too. Okay, now let me explain issue number two. Now, why does it matter how long has it been? Now, think about it this way. Again, if you have to just use yourself in a moment, like you went to a store and you were out there in a store and you're like, okay, you know what? I want to buy a laptop. Okay, you're looking at a nice laptop, either from Dell or IBM or something like that. And you're like, the laptop cost $2,000. And now that the laptop costs $2,000, you can see everyone is willing to buy that laptop for a more expensive price, until the laptop reaches $2,500, for example. Okay, and at $2,500, no one buys it anymore. If no one buys it anymore, the price drops. Now, how much does the price drop? It drops so dramatically, which you thought used to be $2,000 has now come down to $1,500. The price has come down to $1,500. And since the price has come down to $1,500, stand by. No one is going up that price. Look how long of time has elapsed where no one is still consuming that price. If no one is still consuming this price now becomes a more important price, because once price drops from there, the memory gets activated. Remember 3 months ago, once price was at 2,500, it dropped so much. So once the price rises back up at 2,500, everybody says, wait, I remember last year when they dropped the prices of the laptop. Let's not buy it again. Let's stand by until the discount kicks back in. Now do you understand how support and resistance is nothing but a word called memory? Okay? If you're looking at, it very strictly, like supply and demand or anything, very, very strict, like, okay, if I draw my line like this, if I draw my resistance like that, and that's my supply level and my resistance level, you're going to get stopped out with stuff like that. You're going to get spiked out. You're going to constantly make new rules, and you're going to get stopped out. You want to keep the logic in place. The logic of why should it turn from there? Why does it have to turn? It cannot be so technical that you forget why the markets actually work. Okay? So stay away from just following A plus B plus C and go into why must it do something. You will trade a lot better, I promise you that. Okay? All right. So now let's take a look at another chart. Okay, let me turn off the thing there. There we go. Let me open up USD yen, see if there's something there. Okay. All right, here we go. USD yen 15-minute charts. Let's have a look. Oh, you know what? This is perfect for me to show you guys, because in this 15-minute charts, I want you to look at this area here. This is a very nice area that you guys are going to love, because this example is going to show you instantly what I'm trying to tell you. Okay, I'm going to go down one time frame to the 5 minutes to show you this area. Okay, one time frame below. Then we're going to move to our whiteboard. Here we go, and I'm going to turn on my charts. I want you to let me know when you see my circle. If you see my circle, you let me know, and we are going to begin. Okay. For those of you who are saying, does it depend on what time frame? No, it does not depend. It does not depend on the time frame. You can use it anywhere, any time frame, because people use memory in all time frames. Okay. So circles are visible. Let's take a look at this now. Now, here was an area where markets were holding and holding and holding, and then it breaks. Okay. And then it breaks. It goes up to a new high, reaches up to this high. Now, what used to be resistance then becomes support. Okay. This is still considered in the, and so is this. It's still considered in the support area. It's just a matter of what's it doing thereabouts. What's it doing thereabouts? Okay, so the first time price comes down and it touches this area, it's the first touch. What does he do? Can he make a higher high? No. Next time around in that same area, nothing. Okay, nothing. He tries, nothing. Next time around, nothing. What happens to this area? Prices fail. Prices fail from that area. Okay, prices fail from that area, which tells you this support is no longer strong. It's no longer strong. It's going to, the floor is going to collapse. Why? Because we waited to see that information. We can't just activate a trade on the first touch. You need to wait to see what happens. Okay? All right, so now as the floor is collapsing, you're watching this area as, okay, now, if this is collapsing, if I clear this out and saying, okay, well, this seems to be a resistance area here. Okay? Because the first time it collapsed is right there. He collapsed through it. So your support, which used to be there, has now become resistance. Okay? Okay? Which became resistance. So look at this price. Prices keep making lower lows, keep making lower lows. Once price hits here, does he make a lower low? He's trying. He's trying. So now all of you, I want you to tell me one thing right now. Do you think this level is now important or not? Without even telling me how many times it touched it, whether it touched 40 times, 10 billion times, is the price strong or not? Okay? You will have a much better understanding. Much, much better understanding. Make sense? Very good. Very good. Very good. Now, okay, we're going to go through all the quizzes and everything, towards the end of the webinar as well, to make sure you guys can see enough of these examples so you know going forward, because everything I'm going to teach you today in this webinar, you can use immediately afterwards. There is no guessing, no, oh my God, it's going to take me 1 year to learn this. No, you're going to use it immediately starting today. Starting today, you're going to go back on your charts, look back on the trades that you've probably had some losses on, and find out, could I have done that trade better if I just knew this information? Okay. All right. So let's take a look at some more examples here. Okay. Let's move back to the screen sharing part. Let me turn off this thing. Okay. Let's go to Euro USD. Okay. Common pair. Okay. So let's take a look at this one. Okay. I'm going to move back up to the 15. We had the NFP at the same time. Let's have a look. NFP at the same time yesterday, sorry. All right, oh, here's a nice one. So let's take a look at this. Let's take a look at this. I'm gonna move back up one more time frame, and I'm gonna ask you guys a question about all this. All right, keep it at 15. You guys will see this one here. Okay, so back to the whiteboard. Okay. Let me know when you guys can see my circle, and we'll start. Okay, so now in this particular example, take a look at prices in this area. Take a look at prices in this area. Okay, reacts from here aggressively, and prices start to come down. All right, they come all the way down to here. What you're interested in is not the dramatic stuff of this. That's not what you're interested in. Everyone keeps looking at, oh my God, look at that big red candle. Or, oh my God, look at that big green candle. Stop that. You need to stop that today. Okay? The less you panic, the better you'll trade. So when you see something like this, what you're interested in is, okay, interesting. Let's see what it does. That's what you want to do. Let's see what it does. Okay? So no more, oh my God, did you see that? Okay, so once it reacts from here, you're like, okay, interesting. Gets down to here, no lower lows. Gets down to here, no lower lows. Gets down to here, no lower lows. Okay, reacts. These highs, these highs, these highs are getting challenged. They're gonna pop. They're gonna pop. Okay, first high, broken. Second high, broken. Third high, holding time. The time elapsed to make this. Okay, he holds the second time around. Now, once he holds the second time around, does he actually make lower lows? Yes or no? Okay, and how much of a lower low does he make? Remember this area that wasn't breaking for the longest time? Not only did it break that, but he held below that price for a very long time. This level is now important. This level is now important. Reaction, reaction. Okay, you're gonna get a reaction from these areas because that level at that time, up until here, it's important. It's important. Now, the thing to remember is if you do this very strictly, it's memory, right? So if you do this very strictly and saying, I'm just going to put my stops just above here, you're going to get stopped out with stuff like this, with spikes like that. Okay, you need to look at it more. Yeah. Oh my God, such a big red candle. Exactly. So now look at it this way now. What's happening right now as we speak and the charts are just flying up? Why are they flying up? What's going on? What's going on? How did we not know a big candle that was rejected? Look at the size of that thing. It got reacted. Isn't this level super, super strong? It must be super strong, the level. No, it's not news. It's not news. Okay? The news must be released right now, but I want you to know, why was this resistance broken? Okay? I don't want you to focus because the news. I want you to focus what happened the last time. Yes, there you go, Puneet Gupta, very good. Sir Khan, okay, I'm just watching out for some names to see how many of you guys are catching on to the things that I'm talking about today. When it hit this level, what happened? Nothing. No lower lows. Nothing happened. Then it hit it again the second time here. Still nothing happened. And now the same candle is now flying up. It is now popping upwards. Does that make sense? Does that make sense? Are you starting to now understand what is it that's telling you these things? Now, this big spike that was there earlier, not today's reaction, the big spike that was there earlier, this one. Let me point it out to you. Boom, right here. So this big spike that was there earlier, NFP, okay? Okay, NFP happened last week. We're making all these highs and everything. Now, nothing, okay, a little bit weaker here. If we look at the higher time frame, it's not making lower lows. And then we react one more time here, nothing again. We react one more time here, higher low, and then finally flying up north. Okay, let's take a look at another example. I think the more examples you'll see, I see some people still confused. If we do more examples, I think you guys will be on point. Here we go. Yeah, that's the key. Anticipate, do not participate. And the way to anticipate is to collect all the information you can ahead of time, not indicators. So let's go into the charts. Let's take a look at Aussie dollar, see if there's something there we can look at. Okay, let's take a look at this one, see what these guys have to say. All right, ready? We're gonna do the same thing. Here we go. And let me know when you can see the circle. Okay, here we go. All right, so now take a look at this. Markets are reacting from certain levels. So we got a strong move down here, okay? If you want to look at, big red candles, if that's what's grabbing your attention, right? Markets are moving from strong red candles there. This level that moved down, was he able to make new lows? Was he able to make new lows? If yes, that level is now important to us. He hit that level the second time. Was he able to make new lows? Was he able to make new lows? Yes, it becomes strong. It's still strong. Okay? It's still strong. He's able to break that area. That level continues forward. He retouches it, reacts from it. He's going down, he's going down, he's going down. Was he able to make new lows? Okay, now that is our first sign of a weak level. That's our first sign telling you, wait a minute, this is no longer taking the load. Does that make sense? So now do you see it's not these big red candles that are supposed to make you say, oh my God, that is a supply, and a supply that I've never seen before in my life? It's supposed to tell you what is going on in this area. Okay? Does that make sense? Yeah, I can see some of you guys saying ahas. Good. And a lot of you guys are saying yes, now it's clear. Good. More examples. Let's go more examples. Okay? Let's try to find one in the buy side. Okay, let's try to find one in the buy side so you can know where the buys can actually fail. Okay, let's take a look at this. Let's turn off the chart. Let's go into, let's take a look at USD CAD. See if that has, okay. Let's take a look at this one. Okay, now here we go. Let's take a look at this one. Now, isn't this one unusual? Isn't this one making higher highs? Isn't this one making higher highs? See, this one made a higher high, prices went higher. This one made a higher high, prices went higher. Okay, this one pulled back, made a higher high, but isn't this level supposed to be strong? Isn't this level supposed to be strong? Isn't this level supposed to be strong? Okay, right? So here's an example that will throw you a curveball. Okay, here's an example that's going to throw you a curveball. Okay, so how do I know these levels are going to hold, or if a news event like this comes out, they're just going to crash through? Let's have a look. Let's have a look. Okay, let's have a look at this. Let's go up the time frame. Okay, now here we are. Now, if you've ever been to any of my webinars before, you will clearly see me always repeating one thing. Okay, what is the one thing I always repeat? In this industry, if you want to make money and you want to make money peacefully, do not challenge the big boys. Okay, do not challenge the big boys. Okay, some of you're hearing some of the students here saying money spot, universe above. Okay, these are all the things that are explained in the Mastering Price Action course. But for those of you who are new here, the big boy trend is down. Okay, they're in a downtrend. Now, for these guys, as they're taking trends in a downtrend, they're looking at their areas as very important. Very important. For them, these are strong areas. So as this is a strong area, did he make a lower low? Let's take a look at this guy first, okay? This one first. I'm going to put a little arrow there so you guys can see. That's the guy we're looking at. He made a lower low. Not so good, though. Not so aggressive. Choppy, 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 choppy. Goes up. Market starts to react off of this guy. Okay. Reaction happens, but he's got nothing. He's got nothing. Okay. He is unable to do anything. Markets roll up again. Markets roll up again. They break through this level and they start creeping up to the next guy. Okay. Is he powerful enough? Yeah. He was able to make a lower low, but not just make a lower low, crush through it. Now, if on a lower time frame, okay, which was on the 15 that we were earlier, things are telling you, hey, you're good for buys, you're good for buys. And on a higher time frame, it's telling you you're good for selling. This is what we call in the Mastering Price Action course, the money spot. Okay, when the battle begins between a smaller time frame buyer and a higher time frame seller, the bigger time frame always wins. Okay, does that make sense? Anyone confused right now? This is what we call the money spot, which means when there's a battle in here, there are moments in a trend, you will be stuck in a battle, and in that battle, the time frame higher, which has most money, is going to win. Is going to win. Okay? All right, let's do some more examples. Let's do some more examples. Yeah, I can see some of you guys are saying confused. I'm going to explain to you here. Now, let's do some more examples. Let me get onto the whiteboard here, actually. Okay. All right. Now, take a look at this. Yes, I got the golden egg. Okay, yeah, I can see some of you guys. Pamela James also saying explain again. All right, let's take a look. So, in the market, let's say your 60-minute time frame, right? Your 60-minute time frame is basically showing the larger time frame players doing this. They're in a nice uptrend, and then it pulls back a little bit, okay? While it's pulling back, this used to be resistance, correct? Everyone agrees so far? This is resistance. The level is holding. It's creating memory. It's creating memory. Yeah, for those of you guys who are late, not to worry. The webinar is recorded. And as you guys can see in the chat box just on top, the webinar recording will be released within a few hours. Okay. Yeah, so you can see the memory is being there and the resistance is there. As that resistance gets broken and aggressively for the larger players, this whole area is a level of importance. Okay, level of importance. Okay, that becomes a level of importance for them, all of that area, because that support now is very important. Okay, so as price starts to come down again from there, okay, as he's coming down from there, notice how on a miniature scale, it's looking like, hey, he's making lower lows. Hey, he's making lower lows. Hey, he's making lower lows. But the big boy is interested in still buying. While the 15-minute guy or the 5-minute guy who's looking at this as a downtrend is approaching an area where the big boy is going to say, you know what? You are now in my territory and I am going for a buy. And if I need to buy as the big player, okay, if the big player says, I want to buy, for him to buy, what does he need? He needs people to sell to him. If he doesn't have people selling to him, he cannot buy. So how do you get the majority of the market to become a seller? Okay, we're going to go back into basic knowledge of trading. How do you get the public to become the 95%? Everyone know this number, right? 95% are not making money and the 5% are making money. But if at any one given time, I am buying, you are selling, I am selling, you are buying, someone is always buying and selling, how the hell do you get a 95% failure rate? How does that happen? Because the market does one thing always without failure. They always do this thing every single time. Take a look. Take a look. Okay. What do you see in this chart here? What kind of trend is this? What kind of trend is this? Is this an uptrend or a downtrend? Okay, so for those of you who are saying uptrend, very, very good. So if this is an uptrend, as the market starts to go down like that, okay, it is still viewed as an uptrend. The public still looks at this as an uptrend because over here it's like, oh my God, did you see the big green candles? Right? Did you see the big green candles going up? So it's still an uptrend for them even here. As prices react, they come back down even lower. And now the audience who was thinking it's only a buy is now confused. It's like, why is it coming down? I'm not sure. Okay? Further than that, as the markets react and then they go further down, it's now the time when people are like, you know what? It's no longer a buy. It's turning into a sell. And people jump on the sells. They jump and they hit sell, 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 sell. The public becomes a seller at this stage. Nobody is selling up here because no one knows it's a sell. Over here, no one believes it's a sell. Over here, everyone's like, oh, I can see it now. My dog can see it. My cat can see it. My dead grandfather can see it. Okay, maybe bad joke, but the dead people can see this. It's a sell. Now it becomes a moment where everyone's like, of course it's a sell. But as the people are beginning to sell, they are unaware that the larger players are now looking to buy. They're looking to buy from here. They're like, perfect. I needed majority of the people to sell to me so I can take those trades and buy it. Does that make sense? Aha moments right now? Yes? Good, 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 good. One more example. One more example. This is very critical. If you do anything you do in trading is going to fail. Anything you do in trading is going to fail. I promise you that. This is how the market works. You must stay on top of it. You must stay on top of it. Okay, so let's take a look at some other stuff. Let's take a look at some other stuff. All right. Now, let me turn on my screen sharing and turn off the... Okay, here we go. Sorry. Boom. Turn off this thing. Okay. All right. So let's take a look at say pound New Zealand. Let's take a look at that one. Okay. Let's give it a second. It's just loading on my end. Okay. Here we go. Oh, this is a fun one. Now look at this. Okay. Let me put this drawing on there. Look at this one. It's a very interesting one. Markets were making higher highs from here. They were making higher highs from here. Now, in all of these higher highs, these levels are important. These levels are important. Why isn't this level working? Okay, why did this level become so weak? He couldn't do anything. Okay, shall we take a look at one time frame higher to boys? Are there? Okay, so let's take a look at this. Let's go in one time frame higher. Okay, let's go into the 4 hours here. Okay, there we go. All right, so take a look on the 4 hours now. Let me clear this up. You can see the overall flow in this time frame. The big boys are interested in sells. Okay, important level. Market comes up, doesn't even reach that high, starts to react, goes down. New level is created as he makes lower lows, Okay, so another strong level after strong level being created. Then a new level is created once again, because he's breaking these lows. So if you're creating multiple strong levels, the seller is interesting all the sells that is possible. Now, in all these sells would you say at any point when from a smaller time frame, would you say this is an important sell right here? An important level? Would you say that's an important level? Yeah, absolutely, because he made a lower low. So now this is the interesting part. As the market goes back up, and he breaches it just a little bit here. Okay, as he breaches it just a little bit here, the smaller time frame on the 60 minutes, everyone is going to become a buyer. Everyone's going to become a buyer. That's what makes the sell even better. Okay, because now we're playing with a money spot. Okay, that is what we refer to as the money spot. The higher time frame big boy is looking at this purely as a sell, while the smaller time frame guy is saying, oh my God, it's a buy. Can't you see it's a buy? Everyone can see it's a buy. Does that make sense? Okay, all right. Now, how many guys are new in here? How many guys are actually new in here? Let me just take a look at this. Okay. How many guys are new here? Is this your first time here at my webinars, or have you been here before? Okay, so it seems like we got a lot of students in here. Okay, and around 25% of you guys seems to be this is your first webinar. So welcome. So for those of you guys who are actually new, do you guys actually feel you guys are having a breakthrough here? Can you guys actually feel you guys are learning something? Because that's what's important, right? We want to make sure you're able to reach new levels in your understanding of trading. Okay. All right. Let me see if I can get this up. One moment here. Let me here again, because I'm really curious at this stage to see how many of you guys, all of you guys who said you had aha moments and you guys did this. Let's actually see if you guys cracked it down completely. So here we go. First quiz. Markets are going up. Memory is created at $50. Okay. Whatever the price is, doesn't matter. Don't worry about the price. So let's say the price used to be $20 and it went up to $50. You can use this with Euro, USD, or anything, any price. The chart goes up, there is a memory. It goes up to an area, nothing happens, goes up again, $70. Okay. Once it reaches $70 now, prices start to react. Reacts a little bit here, goes down to 68. Do you think this price of 70 is important? Let's hear it. What do you guys think? Do you think this price of 70 is important? Okay, good. So for those of you guys who are saying no, that is correct. Here's why. Here's why. From a price that goes from 20 to 70 at one shot, a minor retracement like that, a minor change in price is not going to matter to the user because his memory is not going to be shocked. The memory must be shocked, as if you're just sitting down, relaxed, and then suddenly you hear a bang. Your eyes will be like, what the hell? What was that noise? It needs to be a shocker to the emotion. So later on, prices react from it, goes up, goes down, goes up, reaches 80. Just a little bit more at 80. But from 80, prices do this. Prices now are at 46. Do you think that 80 price, people's memory is going to get that tattooed? Oh yeah, they're going to remember that thing. They're going to be like, oh my God, do you remember when it was at 80? It just collapsed. It just collapsed. Okay, now here's the thing. There's two sections to it. The first section was what? There was two pieces that I told you about support and resistance that's important. What was the first piece? Does it matter how many times a level touches to make it strong or weak? Does it matter? No. So the first piece, if you guys are saying it, what matters is what did it do from that level? That's what matters. That's number one. Number two, what was the second one? The second one is the time lapsed with it. How long did that price hold? So having that said about number two, if price immediately comes back up to 80, how strong do you think that level is going to be now? Okay, it's going to hold some value, but not as strong. It's going to hold some value, but not as strong. Here's why. Here's why. Because the time was not long enough for people to be like, oh my God, that thing just crashed and it stayed there. Imagine if Bitcoin went from $5 to $100,000 in a matter of 2 days, but 2 days later it crashed. Do you think people are going to jump on the buys? Do you think they're going to jump on the buys? Absolutely not. This is exactly the same thing. If enough time has not passed, this level is not going to be important to the human memory. They're going to be like, oh, what was that? That was weird. And that's what we refer to as a faker or a spike, or some people call it the stop out. That's how it's developed. Make sense? Okay, some more aha moments coming in. Good, good. And that's how a faker is developed. And that's why we call it a faker, because it is not as important anymore. Okay. All right, so next one. Let's take a look. Here we go. Let's say the markets are in a downtrend. Very big downtrend, right? They're going down, going down. All right. Now, in this downtrend, you can see this as, massively, massively, massively down. In this downtrend, we start to get movements that pull back. Holding, nothing. Boom, breaks above that, makes higher highs. Like, oh my God, this thing is pulling back. It's so strong. This level is important. Okay, this level is important. As price comes back down near that area, boom, again. Oh my God, that level is important. It's breaking, it's making new highs, breaking, making new highs. Comes back again, boom. Oh my God, making new highs, making new highs. And then now, as it comes down to this area and it reacts, can you do this buy? can you do these buys here? Okay, so here's the thing. Okay, very good, very good. You guys have been paying attention. Very good. It's becoming a money spot because for these folks, the big players, they're looking at this as good. Price is now up in my area. Remember the logic. No one buys over here. No one buys it. All they see is a big red candle. No one buys down there. Only the big players do. Some people notice this, but no one still buys it. Less people buy it. Now, at this stage, your second or third or fourth swing, more and more orders pile in for the buys. As more and more orders pile in for the buys, the larger player is like, very nice. Okay, if you want to do it in a Borat voice, you can say very nice, very nice. So it's preparing for the large players to be like, yes, they're here. They're willing to buy, and they're willing to buy at any price. It's time to sell. And that's how they get their orders filled in at a very good rate, because they're getting this price up here, not these prices down here. So they take in that price, and as they hit the orders in, when the orders get off balanced, yeah, or Mr. Burns' voice, right? Excellent. So as the orders get hit from there and the orders get off balance, because the buyers are like, what, 10 million, 20 million, 30 million, but they're offset by larger players hitting it for $1, $2, $3 billion, the markets start to get, market gets an imbalance and starts to drop. Okay? Good. So I'm glad to see a lot of you guys are picking up on this. Some of you guys even picked up a little bit on the money spot. I'm very happy to hear about that. Now, let's go into any Q&A. Let's see if there's any questions for you guys. Any questions coming in from you guys, and we can take a look at some of these things. Okay, let's go here. Let me